Well, thanks for tuning into Talking Point today. I'm your host, Niraj Shah. Usually, we talk to Mr. Vikas Khemani on all things investing. In his role at Carnelian Capital Advisors, they look to grow money for their investors. Today, though, we are trying to get Vikas Khemani to comment on maybe the technical aspects of the market, which is the US election verdict, and is the market celebrating too soon? And if not, what could be the near term course for global and local equity markets? He joins us right now on Talking Point. Vikas, so good having you. Thanks much for taking the time out. What's your sense, Vikas? The markets earlier believed that if indeed it's a Joe Biden or Democratic victory, eventually the corporate taxes will go up and that might be negative. For now, is the market celebrating because there is some clear verdict, or is it something else? And how would you read into all the reactions?
So, Neil, I think if you see, for quite some time, Joe Biden's victory was kind of odds were always in his favor. He was, appearing to be ahead in the race for the last couple of weeks, and markets were fairly comfortable with that, and markets have been sort of holding on, rising. So, I think if you ask me from a current state point of view, what matters is whether any incoming president, the stimulus or to revive the economy or to continue the growth will continue or not. Both monetary as well as the fiscal. I think that is the, according to me, most important point to answer because that is what going to drive growth and demand. And in my opinion, no drastic tax sort of increases can happen because still I think you'll have to see the balance of power both between Democrats and Republicans. We'll have to get the real picture only when it appears clear. So I don't think, and in case of Democrats also coming back, you will see stimulus and easy monetary policy continuing. And I think that's a very important aspect for US and rest of the world. And probably that fact doesn't change, and hence markets are sort of continuing. And that's my limited understanding. I mean, I'm no expert on US elections, and it's still going to be fairly uncertain according to me. Probably you will see a couple of weeks going by before we have any final decision. So let's see what happens. It's quite uncertain, but fact that market is cheering up shows that I think stimulus. There's a reasonably good amount of comfort around the stimulus.
Guys, if I can ask you a tough one, if you were not the founder of Carnelian and still heading equities for a large sell side brokerage, what would your advice have been to some of your top clients globally about what they should do with Indian equities or global equities at large in this ensuing period? Wherein, as you said, that there could be some uncertainty because we may not even know what will happen with the election verdict out there, what whether there will be some measure taken by Donald Trump to go to court, etc. What would your advice have been?
So that's not a difficult one. That's the easier one. Neeraj. I'm very very bullish on Indian equities over next medium to long term 3 to 5 years, and I think that is what matters the most. I don't think any institutional. I mean, unless you're a very short term player and you want to trade in and out over next couple of months, that's a very different ball game. And probably in my opinion, one should worry more about the rise of the corona spread, the second wave. That probably in my opinion is more worry than actually US election. I mean, that's how I see. But if I were to take medium term to long term, I think we have lots of tailwinds for Indian economy, both in form of tech growth, manufacturing growth, and we have spoken about many of these things. Interest rates coming down, and combined, put together, effect of all those things would be putting us into a great period over next 3 to 5 years. So my only advice would be that for some reason, if the uncertain period comes, whether it is US elections or coronavirus cases, second round, use these weaknesses to kind of build your exposure towards Indian equities. In my opinion, next 4 or 5 years, Indian equities would be surprising everyone positively.
Okay, just a quick follow up to your first answer as well, Vikas, and that is what you mentioned was interesting. That even if it's the Democratic victory, in all probability, from the looks of it, the stimulus measures will continue, and we do not know what the corporate tax increases could be as well, right? So, in which case, whether it's Donald Trump coming back to power or Joe Biden, which seems to be the more likely scenario right now, a loose monetary policy is probably a given according to you? And if in that case, for the near term, do equities seem well placed irrespective of which party comes to power?
Absolutely, and that's what even markets are sort of indicating by cheering uncertain outcome. Who would have thought that? So I believe that ultimately what decides a market is liquidity and fundamentals. Liquidity in shorter term and fundamentals in medium to long term. Now, fact that if 1 week ago, if somebody told you that market be worried about if there's a uncertain outcome, you would have been very worried. Your markets were looking for a clear verdict either way, which has not happened, but still markets are sharing. So I think clearly it shows that right now there's ample liquidity in the system. There's a risk appetite. Equities, given the where interest rates are, very very cheap, according to me, because ultimately you have to look at relationship of earnings yield as well as the interest rate yields, and that's how you will. So still, equities are not expensive, and certainly not in case of Indian context. So I think that's the reason you are seeing more and more capital flow sort of coming towards equity. So I would say that and I feel that monetary policy scenario will continue to remain like this. Fed has kind of guided that, and I don't think Democrats will change either.
That's probably one of the safest assumptions to make as well, because the other point would be uh, earnings growth in light of uh, the surge of sorts in coronavirus cases, right? I mean, India is probably not as bad, but we've logged in 50,000 cases today as well. We dropped to 35 2 days ago, and that was actually a good thing. We've come back a little bit, but circa this 50,000 number is where we've been moving around. But globally, where the money flows come from, emanate from front and center, US at 1 lakh, Europe is seeing this rise. Would that dampen the liquidity sentiment at all, to your mind?
So there is, I mean, I would not, that would dampen the liquidity sentiment, but as I said, that I would definitely be worried about the second wave of corona rise. We are seeing, some of the countries in Europe, London, Italy, and all, they have been kind of going into a temporary lockdown, I think 1 week or 2 weeks. Now, it really depends on how we have seen that, how things, and winter is just setting in, and virus seems to be more, lives longer and kind of more spreading in a winter environment. We've seen always every year. I mean, general viral activity goes up in winter. So this, if it spreads, you might see authorities have to take knee-jerk reactions, and impact of that could bring some volatility in the market. And as I said, more than US election, now I am actually more looking forward for that. Even India, we are seeing, where winter is only set in some of the northern states, we are seeing coronavirus cases rising. Yesterday, I think Delhi reported 6,500 cases. So I think we might see that, and we'll have to very be watchful and careful of that. Having said that, even if that were to happen, I don't think the reactions will be that much knee jerk as we did last time. So you might see some corrections, and I think those things, I feel, or those corrections should be definitely used to buy equities, because I see a very very good robust environment. We are seeing already this quarterly earnings going doing reasonably well. So next year also will be in a low base. So I think next 3 4 years, I feel impact of some of the structural drivers would start playing out, and I think we will be in a good position.
Mm. Because just a quick follow up for the, again, not near term market impact, I won't get into that. But when the first bout of the COVID cases went up, I think we saw a clear shift towards, how do I say it, for lack of a better word, defensives, but maybe some predictable revenue generating sectors. FMCG was to the fore, uh, to an extent, telecom, yes, but IT and pharma too. Now, these have kind of stayed stable, but we've seen BFSI and some of the others make a bit of a comeback. Do you reckon, because of this very problem of the rising cases, that in the minds of the investors as well as maybe flows, money could go back into the ones which did well from the period of April to June? Is that a possibility?
No, well, I mean, obviously that's quite possible, because especially in case of banking, we've seen an uncertain environment on the retail credit side, and finally we seems to be kind of coming back on that. So if let's say there were to be some second phase of lockdown, and I don't think that will be major stringent lockdown across the nation second time, but if that were to happen, there will be some worries. Market will be sort of bit worried on that. But I continue to believe that you won't have that kind of damage what we saw, because last time when we got into this, it was very very uncertain. Nobody knew how it will pan out. I think now we have got accustomed to what will come out, what how things will pan out. So I think in by and large India is functioning, except some metro cities. So I think this time around you have a known problem. Last time we got into being unknown problem. So I don't think the reactions will be that much sharper. But can market correct? Can market consolidate at 8 10%? It's very likely scenario.
Hmm. Because you've got a very keen eye for observing the impact of flows. Now, we've all long argued right now that the foreign liquidity is good, and I think in India too, the foreign flows haven't been too bad, which is probably a reason why the banking has done what it has done. What about the slight turn in the domestic flows because the last 2 or 3 months, and does that worry you, or you don't think that is as big a concern because the incremental outflows are probably not that large?
So I think there is a little bit of shift happening. It seems like in a domestic market, investors seems to be preferring more direct investing over investing through the mutual funds, and that is kind of sort of reducing the flow towards mutual fund. If you see, there's a spurt into the activity of the retail, and which is represented by the brokerages results. That you are seeing significant direct investing activities right now going up as compared to the mutual fund investments, and I think that is what is kind of defining this. Having said that, I do feel that there still there is as the environment settles down, as the sort of savings kind of settles down, and bit comfort builds around the market, I think the flows towards mutual fund will also start coming in. But we are in that sort of transitionary period, and I don't know whether this is going to stay for some more time. But I know that mutual fund as an industry will grow because very limited set of people only can have knowledge about the market, and in shorter term, people might feel that markets sort of direct investing easier, but long term, people will believe that people will figure out that investing through professional managers is far more rewarding.
Hmm. Okay, so because net um, I take it from your answers thus far that if at all there is some volatility induced corrections that come in due to global volatility or otherwise, you believe that from an Indian investor's perspective, people should use that as an opportunity to buy. You're not too unduly bothered about a slightly medium term corrective move taking.
Undoubtedly, I mean, the only thing I will say that when people buy, they should be should be ready to take a markdown of another 10-15% because that's any day possible. Nobody can say that. But I think from all factors, which at least we see based on my experience of investing into market for over 2 decades, if I look at all the fundamental dots which you connect, it to me it appears more like 2003-4 kind of scenario where you will see ample liquidity coming towards India. You are seeing multiple drivers of growth. Our banking system is by and large sort of clean. Interest rates are coming down, and all these things will have a multiplier effect on the Indian economy. And I also see dollar trade remaining weak. So if that happens, that's also good for EMs and India. So I kind of remain very, very positive on India over next 3 to 5 years. But having said that, short terms are always unpredictable. I don't think any, at least I can't, sort of predict what's going to happen over next 1 month.
Well, if Vikas Khemani is saying he can't, then rest assured a lot of people cannot. Vikas, thanks so much for taking the time out and speaking to us today. Always appreciate you coming in, more so during these times. Thanks and happy festivities.
Always pleasure chatting with you, Neeraj, and wish you happy festivities and your viewers as well. Thank you.
Thank you so much, Vikas. And viewers, thanks for tuning into this shorter version of Talking Point. The idea today was just to give you a sense of what the near-term volatility factors are and how would some of the eminent brains in the investing world navigate through that. Hope this was helpful. Thanks so much for tuning in.